Welcome back. You're watching Power Lunch on NDTV Profit. It's been a rough year for the home loan market. Apart from the fact that property prices have remained high, interest rates have continued to be high. There have been various other issues, including the taking away of prepayment charges, which most home loan companies used to impose. So what's the year looking like as we close it off? We had a chance to speak with Renu Sud Karnad, MD of HDFC, to try and understand what the market's looking like. We started by asking her exactly that. What's the market looking like at the end of the year post the festive season?
Well, I think certainly the phenomena we are seeing is that certain people are coming back, in the sense in the markets which had become very sluggish, which were really Bombay the most, to some extent part of Delhi. The information that I get from Bombay also, that yes, people are back in the market. A couple of these developers have had launches in the last couple of months, and they have been selling homes at very, I would say, it's very encouraging to see the sort of sales that they've been making. Having said that, I think even if you look at the home housing market, I'm talking about sales now, the South has been doing very well for the last, I think, practically all of this year. We have not seen much of a slowdown in any other place, any other city. As I said, to repeat myself again, Bombay, maybe some bits of Pune at certain levels, because Pune normally gets affected by what happens in Mumbai, and some parts of Delhi. And I think one of the reasons for that really was that in these, particularly in these two suburbs of Delhi and in Mumbai, I think the price has gone so high. And it's again the wait and watch syndrome that's happened, that people are thinking prices are going to come down and therefore that's when we'll buy. I don't think the demand is not there, which is the encouraging bit. People still need homes, people want to buy homes. It's just that to some extent they have been priced out. And I think they're all waiting for that magic fall in prices.
But ma'am, that magic fall in prices, will it come? Developers are saying that this time they don't even have the ability to cut prices very steeply because development costs, land costs have been so high. Is that a rational argument? Should we buy into that?
I agree. To some extent, what they are saying is right. I think it's the labor cost and it's the steel and cement costs which are, adding to it. But having said that, there are other developers who have bought land in the past. Land they've bought maybe, 2 years ago. Land prices haven't gone up. They already have the land. It's just that it was more that as prices were going up, people are willing to buy, so let's take the prices up. So it is indeed true that the price reduction that people are expecting, or people are thinking that, prices are going to fall by 20-25%, I don't think that's going to happen. Because of what you said. Because the ability of the builder to drop the prices by that much doesn't exist. Because even though the prices went up, I would say at one time it was more the demand which was pushing it up. If they were able to sell it at 9,000, why not try 10? People were still buying. Why not try 11? People are still buying. But I think beyond that, now with labor costs going up and cement and steel, as I said, going up, I think I don't think the home prices can really come down by more than 10 or 15%. That would be the max, if at all.
All right, so not more than a 10 to 15% fall in prices. Some people talking about 20-25%. Renu Sud Karnad thinking that does not look likely. But ma'am, what does this mean from a home loan perspective? Home loan growth for this year, what do you think you and the industry would close off the year at?
I would say, we are still confident that we should be able to grow between 18 and 20%. The numbers still are there, we can see. As I said, it's pockets. You see the South, in fact the South is doing the best that I can remember in our 30 years of existence, 33 years of existence. It used to be Chennai, when we used to rank our branches in terms of numbers. Chennai was nowhere there in the first 5. Today Chennai is number 2. And I think very soon, and now I'm talking about numbers, not values, because naturally Bombay and Delhi home values are much higher. But in terms of numbers of loans that we do, I think very soon it's going to be number 1. So Chennai, you talk parts of Coimbatore, you even see, except Hyderabad, which has other issues. Even the demand in Hyderabad, believe me, is very good. It's just that the Telangana issue is making people a little nervous of putting down their money. But the last 2 months, we've seen a change there. Hyderabad people have come back and they are still buying. Bangalore, Cochin, the South is really doing well. Parts of other parts also, things like Baroda, Indore, the second tier cities, or I would say the state capitals, where the affordability is still between, the prices are still between 3,500 to 4,000, that category of homes are still selling. So I think we should be able to end the year with our 20% growth, and I think even the sector should see the same sort of growth.
All right, ending the year with 20% growth for HDFC, the sector should see the same. But ma'am, what would next year look like? Could it be at least at those levels, especially if rates start to come off, although the negative balancing factor there would be economic sluggishness, but what are you expecting?
You know, very honestly, Ira, if you look at just housing and the demand and the need and the fact that, you know, the population is young, we are migrating from city to city, I think for the next few years, I don't think housing loan demand is really going to be dampened to the extent that we need to worry. I think double-digit demand will continue to be there for the next few years. Added with that, if interest rates come down, if you're able to get builders to build maybe smaller homes, maybe, you know, and smaller cities where the prices are not, land prices are not that high. So if the supply, or as I said, of the right ticket size comes in, I think we can see growth of a much higher amount too.
And you do expect rates to come off in 2012, ma'am? Is that what you were indicating?
Well, I think certainly a stabilization, and I hope by the middle or the first or second quarter of the next financial year, we hope that rates should ease up a bit.
Ma'am, just moving to a couple of structural issues for the industry. In particular, this was the year when at least the home loan companies were forced to remove prepayment charges. Banks have also more or less followed suit. I'm just wondering if you've seen implications of that play out in any way on the financials, or just in terms of the number of people coming in and opting for prepayment?
See, actually, if you go back to the history as far as prepayment charges were concerned, when we started a variable rate product, we had no prepayment charges. It was just that competition forced us to do it, because A, competition had them themselves, and B, competition was trying to take the loans away. And we never thought of prepayment charges as a source of income at all. Very honestly, Ira, it was a charge so that if a person walked in, you know, otherwise what used to happen is they would just send us a check, and this is a prepayment, there was no conversation, there was no dialogue, nothing. We had a program, a scheme, a product whereby you could, you know, refinance your loan to a lower interest rate, and people didn't know of that. And there was a fee that had to be paid. So the idea really was somewhere that, you know, we can at least explain to the person what are the pros and cons of doing that. And therefore, when NHB announced it, and of course, HDFC will always do whatever regulator wants us to do. So we called it off. I have not seen any major increase as yet of prepayments. I think at the end of the day, it's only when there is an irrational borrower, irrational lender that comes in and starts lending at really very, very low rates to get you know, market share. I think a phenomena like that happens. But I think people are also understanding, because very soon, if you see most of the people who did get into the market trying to play a rate game, eventually a few years later, the people realize that the rates of interest come back to very similar rates. So we have not seen anything as yet which is any cause of worry or anything at all.
All right, that's good to hear, ma'am, because there was a bit of a fear that there would be a sudden increase in prepayments, and that could throw the asset liability story for a lot of housing loan companies out of whack, so to speak. But just speaking a little bit also about what could happen next year, I understand that most of these special rate schemes that were offered by the industry and by you will turn in 2012 into floating rates. Are you watching that very carefully? Are you worried about the potential for loans in that segment to go bad?
See, let me tell you one thing. The way the loan was to begin with structured and the eligibility was worked out. The eligibility was worked out with the idea that the interest rate, say, for example, when we did the first loan, it was at 8.25 and it was going to get converted to 9.25, right, at the end of March 2012. So when we were working the eligibility, it was worked on the rate that we think it would have got converted at. So it was really a benefit that he was getting, a discount he was getting for 2 years, and it wasn't, and that repayment ability was not, the repayment ability was not based on that number. Second is that it's a variable rate loan. See, rates of interest are going to go up, rates of interest are going to come down. So in this particular case, since our eligibility calculations, the way we approached the loan was very similar to what if he'd taken a loan at, say, 925 then, if we didn't have the DRHL at that time. He would have taken a loan at 925. That 925 rate would have gone up because variable rates would have moved up. So I don't think there's any cause of concern, because at the end of the day, the way we approach, any case for that matter, is to try and understand how much he can pay, what is his contribution in the house. If interest rates were to move up by 2%, what does it mean? And remember one more thing is that by the time, it's 2 years now, it's going to be March 2012 when we are going to convert. Incomes would have moved up by a bit. Even in government, incomes move up by anything between 3 to 5%. Private sector, as you know, the last 2 years, actually increments have been much higher than they were in 2009. So I don't envisage any problem. The other comfort that I get very honestly also is that traditionally, as you know, most of the people who borrow from us are buyers, they are not investors. They are people who most probably will live in the house now itself, or certainly it's an asset that it's a long-term asset. They are not investors who are going to be flipping. So there's no cause to worry. We've seen 33 years of cycles going up, rates coming up and down, and we've never had that issue, and I don't see why we should have it now.
All right, that's a comprehensive explanation, and seems to be a fair amount of comfort that there won't be a problem on those special rate schemes when it turns. Last question, ma'am, and this is actually away from the home loan market. I think this year HDFC has finally said that they do intend to get into the education sector in a strategic fashion. I'm just wondering if there are any plans in particular that you can share with us, or what's on your mind in terms of the education sector.
You know, honestly, I'd rather talk about it when we've done something, proved ourselves. But very quickly, what we are trying to do is get into two verticals as far as education is concerned. One is basically we are going to set up a education company, which is going to be providing services. And we are trying to get into this business of making graduates who are coming out of colleges, be it BCom or be it IT and IT services, we are trying to make them more employable. You know, today what happens is when a bank is taking 500 people, they need to retrain them. So we are trying, some of them might realize, for example, insurance particularly, that they get into this business, but they don't like it. It's not their cup of tea. They don't understand what it is. They don't know what their aptitude is. So we are trying to see whether we can bridge that gap between a kid who's in college and is aspiring to get a job, to make him understand what the job is, and try and let him get a feel of what he's going to get into, train him to become more employable in basically IT services and in banking, and in later on insurance, but financial services. So that's one bit. The other bit what we are trying to see is where we want to set up 2-3 schools which will really become the IPR for what we want to do in school education, and actually thereafter manage more schools, because there's so many schools here today who are good schools, who got students but do not have the funds. So whether we can step in there and help manage some of the schools. So it's a very small step. It's a very small commitment, very small plan as yet. It's basically more in the pilot stage. Maybe 2 years down the line, when we've done something, we can have a better interview on that.
All right, ma'am, we'll hold you to that. But thank you so much. Renu Sud Karnad there. We spoke to her earlier with a complete roundup of what the property market, the home loan market is looking like, and of course what the prospects for HDFC are for the current year and what next year could look like.